As we continue to see the fallout from the LIBOR scandal move from bank to bank to bank, I know Scarlet mentioned some other names in the news. Simon Johnson, MIT Sloan School of Management, he's focused on the big picture of what he calls finance's crisis of legitimacy. Writing for Project Syndicate today, he says the big showdowns between democracy and big bankers are still to come, both in the United States and in continental Europe. On the surface, the banks remain powerful, yet their legitimacy continues to crumble. So Simon Johnson, not a stranger to harsh words on the banking system, thinks they are too big to fail. He's been very vocal about this, but sees this as an opportunity here between the politicians, certainly in the UK, over Robert Diamond and the testimony in Barclays, to really take some action on that.
What's he say about the difference between the European banks and the U.S. banks?
Well, he says that in Europe, there's more progress on that end. The politicians clearly won over the bankers when Bob Diamond resigned.
I agree with that.
He would like to see that kind of action, that kind of tension play out here in the United States. It's to be continued.
Yeah, well, the investigations are certainly pending right now. My morning must read has to do with the takeaways, the real takeaways from the earnings season thus far on the real economy. We're 15% of the way through the earnings season so far. And according to Keith Horowitz, an analyst over at Citigroup, he says one of the takeaways is loan demand is more bearish at the margin. Some of the regional banks are hearing from their customers that they are becoming more reluctant to invest in their businesses. We view this development as an incremental negative for the regional bank stocks, and he talks about some of the commentary from the conference calls at Comerica, PNC, US Bancorp.
I'm